Silver's price appears to be in trouble and makes some wonder if they have confidence that silver can hold up above any kind of support. Well, we'll talk about what's going on in the silver market and why I am still bullish, even after this bearish analysis, as we explore. The markets are certainly sporadic, to say the least. Volatility is the name of the game, and it makes people wonder just about what silver can do or not do. Here's where the metals are trading right now, moments before the markets close. Gold is down just 0.2% right now, down $6.50 to $3,234.80. It took a little bit of a hit today, but not nearly as much as silver did. But silver did not plunge today, but it is tumbling. With the Friday Smackdown, it is down 1.42%. Below any kind of support that we've seen in the past. $32.50 was one of those, and $33 was another one. Well, we could say goodbye to those, because it's just barely above $32 right now. In fact, it's sitting at $32.05. In the bid price, it's below $32. It got to $31.88 as a low earlier in the day. So that's where those metals are. Platinum and palladium are actually mixed between the two, with platinum down 5 and palladium up 5. But this is one of those situations that we just have to roll with the punches with regards to silver. But it leaves some questioning as to whether or not the actual silver squeeze is over. And I'm not talking about the ones on Reddit and that we've been talking about before that people tried to recreate some time ago recently. I'm talking about a real silver squeeze in terms of the market supply, and that we've been talking about a structural deficit there. We're going to answer that question here later in the video. But first, I want to remind you about Summit Metals, the channel sponsor. They have some really good deals going on. Always the lowest prices, or very close to the lowest prices out there. One of the fastest growing bullion companies around. SummitMetals.com. Elevate your wealth with Summit Metals. I'm going to be referencing an article here from thetradable.com. Peter Smith says that silver remains in a structural deficit as lease rates climb above 5%. Silver is experiencing continued structural deficit conditions, while gold shows idiosyncratic strength, pushing the ratio even higher, according to market analysis. Of course, we look at the ratio now. It is now above 100 again. It's at 101.24 right now. Now, this is our Friday Smackdown, and we're at the beginning of May, and I mentioned in a previous video that May could be a wild month, and it still could be, and this may be the calm before the storm. Take deliveries and the shorts and positions and the like. Who knows what could happen from here that could lead to dramatic movements in the precious metal markets. One way or the other, we'll see. But we're witnessing what appears to be the final phase of the silver squeeze, according to TDS senior commodity strategist Daniel Gali. Historic patterns suggest significant price movement potential ahead. The last time silver prices managed to break through the $35 threshold in a substantial manner, it took less than 6 weeks for the prices to approach the $50 mark. We came very close last year to reaching $35 an ounce. It was at $34.91. I remember the day well. I remember the number well. Don't exactly know what day it was, but I watched it very closely. This rapid price acceleration demonstrates the potential for swift movements in the silver market when key resistance levels are breached. And so far, that has not worked out too well for silver, and today is an example of that. The increasing gold to silver ratio isn't indicative of the underlying weakness in silver markets, analysts note. Instead, it reflects particularly strong performance in the gold sector. And I'm going to have more to say about that in a video coming very soon. You're not going to want to miss it. But this distinction is important for investors attempting to interpret market signals, as it suggests that silver fundamentals remain solid despite the comparative ratio movements against gold. You've heard me talk time and time again, especially recently, that we should not look to the gold to silver ratio to gauge the performance of one metal against another. They are moving in opposite directions for very different reasons. Silver is a metal, it is a precious metal, but it often trades more as a commodity than it does as a monetary metal or as a precious metal, even as a hedge against inflation. Yes, that's right. Silver is really not seen as that according to the markets these days. It is seen really more like a commodity like copper or even platinum or palladium or lead or zinc. And I've talked about that before. Now, looking back again to some of the analysis of what's going on with the markets today, well, we had some good employment numbers, which actually don't bode well for gold and silver because that means the economy's got some resilience. And that resilience means that more than likely the metals, people aren't going to want to invest in those or put money in them because things are doing fine. Copper, though, is up very, very slightly today. Nickel and aluminum are flat. Zinc is up very, very slightly, and so is lead. So it looks like that the commodities really aren't doing much today, and it's having an effect. Crude oil is down slightly, below $60. It's at $58.53. So in a sense, that could be part of what is pushing against silver. The Dow Jones is actually up 589 points right now. The Nasdaq is up 243 points, and the S&P is up. But the dollar is actually down slightly in late trading here, but it is above 100. Well, it's at right exactly 100 right now, which means that it's strengthened a bit since the last report here, and I think that is part of what is weighing in on the markets here. So it's interesting and fascinating how many different things can push and pull against silver, especially, and that is what we're seeing, I think, today in a sense. But I do think, in terms of the silver market overall, that we are at a inflection point, and I think that likely there's more that is going to support silver's price through the year than not, which is why I'm sticking to my prediction stubbornly of $36 an ounce, even though we're further away from that now and just above $32. That's a $4 increase. But now remember, silver at one time traded more than $2 in one day. And so if we see more of that activity happen again, which is going to be supported in part by gold, I think we could see silver definitely take a move and closer to that $36 an ounce. But it's got to get past 35 first. And this analysis is saying that if it does get past 35 in a sustainable manner, and then we could see it, based off of past performance, move up to $50 an ounce. However, we cannot weigh what happened in the past as to what's going to occur in the future, because when it reached $50 an ounce in the past, that was an anomaly, which means that there's got to be other factors that are going to play a role in the natural market, not based off of what has happened in the past. Several with that gold to silver ratio indicative underlying weakness in the silver market, this strong performance in the gold sector. It's important that we understand how to interpret these markets. Now, several key indicators point to potential upward price movement for silver in the near future. Lease rates continue to climb north of 5%, indicating tightness in the physical markets. Meanwhile, discretionary traders remain under-positioned, suggesting potential buying pressure once positioning adjusts. These factors combine with the ongoing structural deficit in silver markets to create conditions ripe for price appreciation. And there we go. Now, it's just it. There's so many different things involved here, and this is potentially good news, but hey, we don't know. We'll see what happens. We got to be realistic, and as we navigate the precious metal markets and weigh when we're going to purchase or not purchase. But again, I remain overall bullish on both silver and gold, and I think that likely we're going to see at least some area of support here. And for silver, it very well may have pulled back now to $30 an ounce for that support to take place before it climbs back up again. Who knows? But right now, it's gaining a little bit of the ground lost earlier in the day. It's now at $32.07, a 2-cent uptick since the start of this video. But the current context in which liquidity is critically scarce, we expect the end game to result in a substantial upside convexity in fiat prices, according to market analysis. This liquidity constraint could magnify price movements when the anticipated buying impulse materializes. For silver investors, this liquidity factor adds another dimension to the market dynamics that are currently at play. And there's so many different dimensions that we have to consider, which is why it's tough to really pinpoint as to what silver is going to do. Market observers believe the next significant buying impulse for silver is inevitable given the current market conditions. The combination of scarce liquidity, rising lease rates, structural deficits, and underpositioned traders creates an environment where price discovery could accelerate rapidly once buying momentum returns to the market. This timing remains uncertain, but analysts suggest the conditions for such a move are already in place. This ongoing deficit in silver market remains one of the most compelling fundamentals factors supporting the bullish case for silver. Despite price fluctuations, this supply-demand imbalance continues to underpin the long-term outlook for silver as both an industrial metal and a monetary asset. And I do agree with that mostly. So we'll see how this plays out. I am continuing to hold silver. I'm not selling any of it, and I'm buying it when I can. And that is one thing that is also affecting, to some degree, very, very slightly, but there's not as many physical buyers of silver these days. But that is picking up and fluctuates as well. But hopefully we'll see it pick up a little bit more as the dips are manifesting themselves. It provides an opportunity to buy more silver. Let me know what your thoughts are in the comment section below. Hope you found this video informative, insightful, and educational. Check out the videos I posted earlier in the day. I've got some breaking news about the Lincoln cent. You're not going to want to miss that video. So I'd like to extend a multitude of gratitude to you all for watching and encourage you to please rate, share, comment, and subscribe.